Banking is becoming invisible. You're already using it. Every time you buy now, pay later at a checkout, you get instant credit on a platform or pay inside an app without thinking about it. That is embedded finance. In the UAE and Saudi Arabia are moving fast on it. So joining me on Zoom is Sophie Guibaud, IFC Nominee Director and co-chair of the Saudi chapter of MENA Fintech Association. Welcome, Sophie, to Wall Street to MENA. Sophie, tell us first, what is exactly is embedded finance? If you can give us the simplest definition.
The simplest definition would be to get finance wherever you need it at your point of context instead of going on an app. So when you need financing or when you need to make payment, it just happens in front of you in the context you are in.
So it's very instant. You can pay everywhere and anywhere. Sophie, also Saudi Arabia's embedded finance market is already valued at $20 billion. Why is this region moving so fast on this?
Yeah, I think it's the conjunction of three factors why it's moving so fast. So the first one is obviously Vision 2030, putting a positive urgency on the country. The regulator and the government have set as a target 525 fintechs by 2030. So they are making things easier for fintech to launch. The second point is that there is no banking heritage to rip out. So while in Europe, for example, we have had to fight against system from the 80s, there is no such heritage here. So it means that there is already instant payments. There is even governmental KYC and KYB, which makes the experience so much simpler and for fintech services to launch so much easier. And finally, of course, a young mobile-first population, and it's a large one. So the conjunction of this factor make it basically a great market for embedded finance to flourish.
Yeah, and that take me to my next point as well. In the UAE, cashless transactions are expected to hit 90% of all transactions by the end of this year. What is driving that?
Yeah, which is an outstanding number. And as users, I think like many of us are actually thankful for that. And I think it's the conjunction of course, the strategies that has been put in place by Dubai, so Dubai cashless strategy, for example. The fact that they are already players in the markets that are being widely used, such as Karim Pay, that really enable for this vision to realize. And finally, so many people that culturally are comfortable with using online payments and super app and QR payments. So it's actually the same ingredients as we can see in Saudi. It's like population that's ready to use and eager to use the infrastructure that's already in place to enable them to use it, but also a drive for governments to actually push for contactless payments rather than cash.
Yeah. If we look at the Gulf in general, like Tabi and Tamara are the perfect example for this. They have made buy now and pay later mainstream across the Gulf.
Yeah.
Is that the most visible face of embedded finance right now?
So I think it's the most visible one because indeed you see it everywhere, and there is many people that are using those services. But the truth is that embedded finance is not just like BNPL services. There are many more services, and the ones that I would say are probably contributing even more to the ecosystems are the ones that are at the beginning of the chain. So it means enabling merchants to buy the goods they need to sell the services to the people. It's those services, Tabi and Tamara, that are enabling the merchants to sell to people cannot always afford it at the time that that they purchase, and actually managing the collection, the financing, and the payments and the collection of those loans. So embedded finance is not only seen at the retail side, but there is also lots going on at the SME side that enable financing and embedded finance to take off.
Yeah. Banks also, and you pointed that out earlier, the bank's heritage, let's say. But now in this region, they are repositioning themselves as infrastructure providers rather than customer-facing brands. Now, what does that actually mean for the average person in their everyday life?
For their everyday life, it really means that instead of having to look into their banks that might not have all the services they want, or actually might not provide them the rewards they want, those people can actually access financial services and insurance and investments where and when they need it. So it can be, of course, on other apps and fintechs, but it can be also their favorite retailers where, for example, they are shopping every week, that's providing them the financing, that providing them the means of payments, and that's giving them the rewards based on that. So it means that they can actually consume financial services where they need it, but also where they want it with their favorite brands, rather than having to depend on the banks that, for example, get their salary.
Thank you so much, Sophie, for joining.